We've been talking a lot about how AI is changing the game for borrowers, but what about the other side of the equation? Let's flip the script and look at how AI is shaking things up for lenders. You might be surprised to learn that smarter credit scoring could actually lead to more people getting approved for loans. Here's the thing, traditional underwriting processes have always been a bit of a guessing game. Lenders had to rely on a limited set of data points to make decisions about who to lend money to. It's like trying to put together a puzzle with half the pieces missing. But AI is changing all that. With AI-driven credit scoring, lenders can now see the whole picture. They're not just looking at your credit score anymore, they're analyzing a whole range of data points that give them a much clearer idea of your financial health. This means they can make smarter, more accurate decisions about lending. Let's talk about what this means in practice. AI can help lenders identify borrowers who might have been overlooked by traditional scoring methods. Maybe you're someone who doesn't have a long credit history, but you always pay your rent and utilities on time. An AI system can pick up on these positive patterns and flag you as a potentially reliable borrower. This is huge news for people who've been left out of the traditional credit system. The Consumer Financial Protection Bureau, CFPB, has some eye-opening stats on this. They estimate that removing medical debt from credit reports could lead to about 22,000 more affordable mortgages being approved each year. That's 22,000 families who might be able to buy their first home, all thanks to smarter credit scoring. But it's not just about approving more loans, it's about approving the right loans. AI can help lenders assess risk more accurately, which means they can feel more confident about their lending decisions. This could lead to lower interest rates for borrowers who might have been considered higher risk under the old system. Now, you might be thinking, this all sounds great, but how do we know we can trust these AI systems? It's a fair question. There's been a lot of talk about the black box nature of AI decision-making, and it's true that some AI systems can be hard to understand. But here's the good news. The financial industry is working hard to make AI more transparent. They're developing what's called explainable AI systems that can break down their decision-making process in a way that humans can understand. This means lenders can explain to you exactly why you were approved or denied for a loan, which is a big step forward in terms of fairness and transparency. Let's talk about some real-world examples of how this is playing out. Some online lenders are already using AI to offer loans to people who might not qualify under traditional criteria. They're looking at things like your education level, job history, and even your online behavior to get a more complete picture of your financial health. And it's not just about saying yes or no to loans. AI is helping lenders offer more personalized products. Maybe you're someone who's great at saving but has a thin credit file. An AI system might identify you as a good candidate for a secured credit card with a path to upgrade to an unsecured card after a certain period of good behavior. The really exciting part is that this creates a win-win situation for both lenders and borrowers. Lenders can expand their customer base and offer more competitive products, while borrowers get access to more financial opportunities and potentially better terms.